1940 में ब्रिटिश इंडियन आर्मी की बलोच रेजिमेंट की 5वीं पलटन ज्वाइन की। हिंदुस्तानी सिपाहियों ने जापानीज का बहुत बहादुरी से मुकाबला किया और उन्हें जापानीज के हवाले कर दिया गया। हिंदुस्तान और अंग्रेजों के बीच एक धागा था, वो टूट गया। गद्दारी की कोई माफी नहीं होगी।
You are charged with Indian Army Act Section 41, waging war against the king.
जब अंग्रेजी अफसरों ने साडी हिफाजत नहीं की, तो वो हमारी वफादारी के हकदार किस तरह हो सकते हैं? अगर जिंदा बचा उसके बाद शादी करोगी मुझसे?
Hello and welcome to Rajya Sabha Television. You're watching a brand new edition of Policy Watch with me, Frank Pereira. The fiscal deficit trends in the country have shown a stark reversal and the situation is expected to get worse in the near future. Comparing with earlier trends, states were more fiscally prudent until about 3 years ago than the centre are now having bigger deficits and facing biggest financial difficulty this financial year. With 3 key pressure points, this fiscal could be worse. First being the spate of farm loan waivers across states. The second pressure point being the interest liabilities of states that have participated in the Uday scheme for financial restructuring of electricity distribution utilities would increase going forward. And third, the effect of the latest Supreme Court's order closure of bars along highways and rising prohibition efforts across some states. At least a dozen of the states are expected to see a substantial dip in state excise revenues from alcohol. In the first segment of Policy Watch today, we will analyze the rising fiscal deficits of the states. Joining me on the program today are Subhomoy Bhattacharjee, consulting editor, The Business Standard, and N.R. Bhanumurthy, professor, NIPFP. Thank you to both my guests for joining me on this edition of Policy Watch. Subhomoy Bhattacharjee, I'd like to begin with you. Of course, this trend that we've seen, this reversal as far as the state's fiscal deficit is concerned, is this trend going to continue?
Yeah, in fact, it would continue. And if you look at, I wouldn't say the center is getting into problem, because center seems to be not only maintaining the fiscal balance, it has also sort of ensured that it doesn't go off the beaten track. That's thanks to fiscal evangelists like Professor Bhanumurthy. But the states, yes, and if you look at the spread on the state bonds, the yields on them, they have spread. Now what that means is that the market is actually factoring in the fact that there will be more state bonds coming in. So the big, I mean, to put it simply, the more the states run a higher fiscal deficit, the more they have to borrow from the market, because successive finance commissions have said that they should be actually be depending on the market. So once that is happening, and the states and the markets actually expect the states to borrow more, states would borrow more when they have more need for more deficit, as you pointed out rightly. That means the trend is definitely going to continue. So yes, we have a situation.
How do we buck the trend, Professor Bhanumurthy? What needs to be done? Because this clearly is a problem, and it's a problem that's going to have great great impact in the near future.
No, well, I think this whole issue need to be looked into in a different manner. One of the reasons why the state finances are in a bad shape, at least some of the states, is largely because they have started adopting that Uday scheme, which in our view, although this fiscal deficit is increasing for some of the states, it was very important for state governments to bring the whole the electricity burden onto the books, so that you can start taking care of that. So if you remove that Uday scheme, my guess is that the state's fiscal deficit has not worsened as much as we think. But the biggest problem here is not about the fiscal deficit per se. In the process of cooperative federalism, we have given a lot of, I think the center has already given a lot of rights to the state governments in terms of expenditure. My own worry is what is happening to the quality of expenditure. In the past, we all knew that, at least the numbers show that, state governments were spending more on capital expenditure, and some of the revenue expenditures were taken care by the central schemes and some by the states itself. So now in the process of this cooperative federalism, what is happening to this expenditure pattern? I think that is much more worrying for me rather than the headline fiscal deficit number per se.
Sure.
Now the states have been given more money in terms as part of devolution, but are they spending on the developmental targets that they have fixed for themselves? Are they spending on the capital expenditure? On a lighter vein, I would say that we only see a lot of advertisements coming in the newspapers. I think that is the most easy place where they seems to be spending more money actually.
So that needs to be cut, to deal with the situation.
Yes.
As a short-term measure.
Yes.
What other short-term measures can be taken, Subhomoy, at the moment now? I mean, over the next 6 months or the next 3 quarters, what can be done?
Frankly speaking, the direction of fiscal deficit gets set for the entire year.
Yes.
So in the middle of the year, there would really not be much. The states have already set a particular borrowing pattern and they will be going ahead with it. Frankly speaking, I wouldn't expect the situation to change till the award of the next finance commission comes, when it further reorganizes the states, also state finances. Also, the fact that the GST numbers would now start showing up means the states have to be very cautious that they can keep their fiscal house in order. So states will definitely not want any disturbance in their borrowing program. They will be going ahead with it, because they do not know how the GST numbers would pan out. Everybody expects that the numbers would be higher,
yes,
that there will be more in the pool for everybody to dip into. But that's something that the states would definitely be there on. The interesting thing is, because the states are borrowing more, the banking sector and the insurance sector, they would be dipping into this pool more. Now, what does that mean? That means that the corporate bond market is actually seeing hardening of rates. Why is that happening? Because obviously a state paper with a sovereign guarantee is a much more attractive paper for the corporate, for the banks and insurance companies to dip into, rather than a corporate bond market.
There's some guarantee there.
Absolutely. So what is happening is, we are seeing the possibility of crowding out of private borrowing from the market. This had not happened with the center, and the reason why the center had been told to be cautious over the past decade and more was that it should not crowd out private investment. Well, the center has kept its part after several moves, but the state's hardening of, rising borrowing is pushing out private borrowing from the market. Now, that is a dangerous thing, because that means that the private borrowers would have to offer a higher rate of interest, which means the overall economy gets into a slightly costly situation.
Yes.
So the state's borrowing has definite implications for the rest of the economy.
Indeed. Another aspect to this, Professor, is the fact that state after state is doling out farm loan waivers, and Maharashtra has done it, Uttar Pradesh has done it, and there are several more states that probably will follow down that path. Now, that too is going to have a major burden as far as the finances of the states are concerned. Where is that money going to come from?
Absolutely. I think that's going to be the biggest risk going forward. I think that's one of the reasons why, if you look at RBI governor's statements, so he says that the whole macro will be disturbed if you state after state start doing this loan waiver scheme. So I think that's one of the biggest risks they are factoring in when they go for a future monetary policy. So, but on the other hand, my view is that if in any case they have to finance these loan waivers from some other sources, I don't think there is any innovative way of doing other than taking away some of the money that's been allocated for the developmental purposes. So it will have a significant negative impact on the growth in the short term as well as on the developmental expenditure. There are already some of the initial information that we are seeing, where some of the states are actually reducing the expenditure on important sectors like education and health, which was otherwise partially funded by the central schemes. So overall, in my view, what I am trying to say is that this cooperative federalism, in my view, is going to give up some kind of a mixed picture, where some states are doing better in terms of growth and development, other states are not going to do as much as we expect.
Sure, we've spoken about Uday, we've spoken the Uday scheme, we've spoken about farm loan waivers. What about, the liquor ban and the revenue that comes out of alcohol? Bihar has banned it. We all know what's happening in Kerala. So the revenue losses on that front, how are those losses going to be made up, Subhomoy?
Frankly speaking, you can't. I mean, because what has happened is the states have now moved on to GST. GST doesn't give them too much of option. So the only way the states can get around the impact of giving up the liquor revenue is for them to impose additional tax over and above GST. Maharashtra has done that.
Tamil
Nadu has done it, and now that's the sort of risk that we run. I'm quite sure the GST Council would be frowning on it, because that's not the way the GST architecture is supposed to work. So definitely the states don't have the leeway. As Professor Bhanumurthy is pointing out, the way ahead is for the states to be more efficient with each of their money. So one of the things that we could expect is that the states would now be much more careful about how they spend.
Sure.
Because the federalism, the point that he made, that they're getting more money and they do not know, or rather they are not that good in terms of using the money. That part the states will have to start ramping up.
Sure. Professor, please close the show for us, or close this segment for us with your concluding remarks.
Well, I think the one more risk that I think we are missing here is the implementation of 7th Pay Commission itself.
Yes.
I think when that comes in, I think the burden is going to be much more. But having said that, GST Council has some compensation for next 5 years or so. Maybe all these things will mix up in this whole compensation package. So maybe a couple of years down the line, you may not see that kind of a pressure. But after that, I think the state governments have to really, set their house right.
Indeed. All right. On that note, then we'll close this particular segment. On the other side, we'll bring you more after this short break. Welcome back. You're watching Policy Watch with me, Frank Pereira. The Cabinet on Wednesday gave an in-principle nod to the merger of state-owned Oil and Natural Gas Corporation and Hindustan Petroleum Corporation Limited. A committee for the deal will soon be formed, and the merger is likely to be completed within this financial year. HPCL will remain listed as a subsidiary of ONGC post the merger. The Finance Minister, Road and Transport Minister and Oil Ministers will be a part of the merger panel. The government will ensure that there is no open offer. ONGC had sent a proposal to acquire HPCL today, Oil Minister Dharmendra Pradhan said in Parliament on Wednesday. Now, the government owns 51.1% stake in HPCL. The deal could be valued near 28,000 crore rupees. In our next segment, we will take a closer look at this development. Joining me on the program right now are Himanshu Vats, Senior Editor, The Economic Times, and Ajay Shankar, former Secretary, DIPP. Thank you to both my guests for joining me on this edition of Policy Watch. Mr. Shankar, what do you think of this merger? Talks about this merger have been on the cards for a long time now, and finally it looks like it is going to happen.
This is a reflection of the government's determination to actually go ahead with the big plan which was enunciated by the Finance Minister of creating a global giant. And creating a global giant by bringing in all the oil PSUs under one umbrella. Now, this is a major challenge, it is a major objective and a difficult objective to achieve, because we have had separate companies working separately. So, this is the first step towards fulfilling that larger goal. And the decision is a reflection of the decision to government of moving ahead, and moving ahead cautiously, treading the waters carefully. So, the decision is not to have a merger of the two companies, but to take over of the company by ONGC from government. So, government shareholding will get transferred to ONGC to begin with.
Sure. Himanshu Vats, both these companies, their focus and their expertise is in two different things. They are both oil companies, yes, but now it becomes, after the merger, it will become a whole package. so to speak?
See, ONGC actually started this journey many years ago when it acquired MRPL. I personally am not very thrilled about ONGC getting into refining, because they should focus on looking for oil and gas. So I hope after this merger, this focus should continue, because ONGC showing profit and turnover from refining, that should not conceal what they're doing in exploration. So that is of paramount importance. But the broader point, as the other panelists also raised, it's a part of this government effort to have a bigger oil and gas giant. And why we need this, even after the merger of these two, the combined market cap, which is the total number of shares multiplied by the share value, which is a yardstick for the worth of a company, will be around $42 billion. Although the ONGC chairman says that an integrated company will get a better valuation, but still it is 42 as of today. And if you look at a company like Exxon, it is something like $300 billion. Even Shell and all, they are in the $200 to $300 billion kind of range. Now, when you're going in the international market, whether you're looking, negotiating something, you are looking for an acreage to drill or acquire an oil field, you are competing with these companies. So if you're a complete baby, nobody listens to you. So you need that muscle. So that, I think, is a very important part of the deal. The second thing is the Indian market itself is getting very liberal. There was a refinery by SR, which is probably going to Rosneft. BP and Reliance is already heavily into retailing. BP also has plans. Now, once you have this kind of competition, you need a very strong domestic player to do that. Otherwise, these guys can be outmaneuvered. And plus, not to forget the fiscal side of things.
Sure.
Government will get some 28 to 30,000 crores from this, which is the transfer of money from ONGC to the exchequer. So this is the broad spectrum under which this has happened.
Indeed, indeed. Mr. Shankar, as far as this deal itself is concerned, or this merger is concerned, what are some of the biggest challenges that we need to deal with?
Now, as of now, it's been handled in a way where there is really nothing significant that will happen immediately. All that will happen is, as he rightly said, that the government will get a substantial amount of money as a part of its disinvestment target. And it has been announced that the two companies will continue to work as separate companies managed by their boards. The longer term issues are complex. How do we get synergy between two companies which operate independently? Do we look at an actual merger at a future date? How do we look at the subsequent acquisitions? Because you have one option is that ONGC becomes a company by itself doing what it does and owns a lot of other companies which are subsidiaries. So in effect, ONGC replaces the Ministry of Petroleum. The other is that you look at mergers, which are more complex. There are complex HR issues, etc. The other is that you hope that ONGC is able to provide better synergy than the ministry is able to do today. This is in addition to the financial strength that this large company will acquire. But each of these poses significant challenges, and these challenges will have to be understood and met as we go along.
It will be work in progress then, is what you're suggesting at the moment.
Creating a global giant is not an easy task.
Indeed, it is
and
not.
An efficient and competitive global giant is tougher.
Sure.
Creating a large giant is easier, but creating one which really brings in synergy, efficiency is a tougher challenge.
Sure. Sure. Himanshu, as far as mergers are concerned, can we expect more such mergers in the near future? Because the government has made it clear right from the beginning that that's the way forward as far as the government is concerned.
Well, there is a lot of speculation on that, and there have been a few news reports also saying that, there could be a merger of something like Indian Oil and Oil India, which would be mirroring this thing, except that the dominant player would be a refiner in this case. There's talk of BPCL and GAIL. That seems to be, the broad flavor of the month to merge. Earlier it was the other way around, long back when GAIL, the gas transmission company, was created, it was actually the gas marketing arm of ONGC. So those days the fashion was to split and focus on your core competence. Now it's a matter of size, and I think the government revenue is also a big factor in this.
In fact, that is one consideration which is quite important, because we have had these oil companies sitting on large reserves and not being able to invest those reserves adequately, and government desperately needing resources for its other needs. So this is one easy way of acquiring, getting resources, meeting the disinvestment targets, and yet not confronting the more complex issue of actually wanting to privatize or undertaking strategic sales.
In fact, last year's budget, somewhere in one of the series of thick documents, there was a line which talked about reserves, cash reserves of companies, state-run companies, and it said you should either use it or lose it.
Yeah, I mean that should be the way forward. I mean, at the end of the day, they are all businesses. They are all wings that need to make money, and that's what drives them. So why not? And but not just sticking to this sector, but on the whole, do you believe we can see more such mergers in the days to come? Because there has been serious talk about it. There has been serious talk going on for almost a year now, and the government is very keen on disinvestment as well. So as far as not just this particular sector, but on the whole,
I'll put it slightly differently. I foresee a lot of strengthening of the public sector. In the years of liberalization, there has been a lot of weakening. Many strong PSUs have weakened. Even the oil PSUs, it's just because they are in a near monopolistic kind of situation. So they give you the bulk of the public sector profit. But overall, there's been a weakening, and that thing is being reversed for a few years now. Even in the power sector, earlier NTPC was sliding down, and many private entrepreneurs were saying that by 2015 or 2020 we will be so much more than NTPC. Now NTPC has gone to 50,000 megawatt from they were 20 some years ago, 25, whatever, and the private sector power projects are in a complete mess. And NTPC is now thinking of even 1 lakh megawatt and how much renewable will be a part of it. So I see a broad strengthening and muscle flexing of the public sector, and the process that happens will be a combination of their strengthening, government trying to get some revenue, some money out of some stake sale here and there. And I think this government sees public sector as a key instrument of economic intervention also.
Sure. Sure. Okay, it's that time of the program now. Yeah.
I would supplement that by saying that if you look at private industrial houses, they are able to leverage surpluses of one business to finance diversification, growth and expansion better than government has been able to do with its public sector undertakings. So I hope that this is the beginning of more intelligent use of the reserves as well as the management abilities of our public sector for accelerating economic growth.
Sure. I've got 2 minutes left on the program, so quick closing comments from both my guests. Himanshu, what can we expect in the days to come as far as this merger is concerned? And is it going to be a good thing for the industry?
I think it should be a good thing if it is well managed. One of the things I would expect is a decision on how ONGC will deal with a refining subsidiary called MRPL and a new one coming here, whether they will merge it and whether refining would be kept as a separate thing to manage on its own, and ONGC focuses on looking for more oil and gas. That's what I would look forward to.
Sure. Yes, Mr. Shankar, your closing comments on the program.
It depends on how skillfully and deftly managements in the corporations as well as in the ministry and government handle the movement forward.
Will ONGC be given a free hand?
I think it's a question of getting synergy and getting the best outcomes. I think we focus too much on A or B getting a free hand. More important to see what they do together and do it well.
But autonomy at the end of the day is a good thing.
I would say synergy. Synergy.
Okay, the key word being synergy. Then I'd like to thank both my guests for joining me on this segment of Policy Watch. Himanshu Vats and Ajay Shankar, thank you so much, gentlemen, for joining me on the program, putting things into perspective for us. That's all the time we have on this edition of Policy Watch. See you again next time.